Ladies and gentlemen, good afternoon. My name is Dr. Monet Mossad. I'm the Director of the Institute for Futures Research at Stellenbosch University, and welcome to this session this afternoon, courtesy of USB Ed, the University of Stellenbosch Executive Development. We're sharing some views with you on the recent supplementary budget review by Minister Tito Mboweni, but also taking a broader look at the medium to longer term implications for business. I'm joined this afternoon by a stellar cast on our panel. What we'll do is get a first review, just a first impression of the recent supplementary budget, and then move very much into the implications for business, for talent, for the consumer, and implications also for the investor. So Michael Sudakaza, if we can start with you, just a first response to the recent announcements.
I was thinking that if you are in infrastructure, the next few months through the end of the year should be okay. But if you are not, you might have a bumpy road. A theme that will be recurring for my remarks today is that I also felt like for those companies that have a footprint on the continent outside of South Africa, it's really time to double down. South Africa is taking the brunt of the COVID challenge on the continent, but there are a number of other countries that are on the continent but have had less of an impact, both from a health standpoint. And South Africa has the skills, the resources to assist those companies. So some of those companies, traditional partners in Europe, the US, even Asia, may be struggling again over the next 12 months. So it's an opportunity for South Africa to be a supplier of choice, which helps the South African companies and it helps the continent. So if anyone missed that memo, I really do think it's a good time to be thinking about the continent.
Thanks very much, Michael. And straight into the opportunities. Next, we'll hear from Dr. Martin Davies. Martin, just your first reactions.
Good morning, thank you. I've been hearing a lot of debate in recent weeks around the so-called shape of a recovery. Which letter of the alphabet will the recovery, when eventually comes about, resemble or mimic? Will it be V-shape? Will it be U-shape, W, or L-shape? You've heard all of this. We're all debating as to what letter will apply in our case. Well, I think they're all wrong, and it was very apparent in the budget statement that the letter that is first and foremost looking ahead is F-shaped, and F means frugal. So I think in the coming months and years ahead, whether you are from a household spend, from an individual consumer, from a company perspective, and ultimately, hopefully, which I didn't hear much of, public sector, frugal, the big F is the word that needs to be applied in South Africa, I'm afraid, going forward.
Pinard, give us your first reaction.
Well, I think sort of Martin, to an extent, took the words out of my mouth. This concept of zero-based budgeting has now been introduced. Of course, we didn't see necessarily that on Wednesday, but apparently we're certainly going to see it from the mini budget in October. So I think to an extent that you are a business that has relied on government work to a large extent in recent years, I think that strategy will probably need to be rethought a bit, because as Dr. Davies mentioned, I mean, from the government side, there's not a lot of expenditure that's likely to come through. I mean, even on the infrastructure side, it is, I think, government is thinking about how can they facilitate infrastructure, but they themselves don't have the cash to actually finance that. So it's rather working with the private sector and enabling private sector to put financing on the table.
Salman, is there a future role for government here and for provincial government? A view from Westgrow?
I think from our side, the broad philosophy is, to assist to retain companies as opposed to rebuild companies in the economy. I think it's a more seamless approach. It's a more cost-effective approach, and also with a 7.5% decline in GDP and our reliance on foreign direct investment, which is now going to drop by 40% according to the United Nations. I think it's all about reinforcing local companies to bolster their expertise and let them drive the growth, as was said by previous panelists. So we're very much in agreement with that.
Right, easier to keep the little momentum there may already be. Anna-Marie Leroux, give us your view.
I think my takeout, and I had the privilege to actually deal with a few business leaders in the last few hours this morning, was that yes, Minister Mboweni was high on reality and maybe a little bit low on detail, but I think there was no surprises other than the narrative about Aloe Verox. I think the whole expectation from a business perspective was met. I also think it's appropriate because at this point in time, a zoomed out view that kind of like gives us a little bit of time to think about the how is very appropriate. So I don't think it's a bad start. No surprises, as I said, but this leaves a host of choices and a host of tough decisions that need to be made within the next few months.
Okay, so let me challenge you a little bit, our esteemed panel. Let's just spend a few moments on the economics. With inflation around 3%, with desperate levels of currency weakness, small interest rate cut perhaps still possible, but a revenue shortfall of 304 billion rand, a budget deficit of 14.5% of GDP, debt levels absolutely soaring to over 80% of GDP. The minister gave us two scenarios. A passive scenario, what we as futurists call the current future. Do nothing and see what happens. He says in that scenario, debt to GDP grows to 120% in the next 5 years. And yet Anna-Marie Leroux tells us that's exactly what business needed to hear. Let's hear from our panel. Is this what business wanted to hear?
I don't know if it's what they wanted to hear, but I do think that there were kernels of what they're thinking about as well. We're now 2 or 3 months into the COVID season, and many of the indicators are down, but people are starting already, I think, to think about what the strategy will be. They're trying to enhance their digital capacities because that's part of our near-term future. So, to the point that Anne-Marie mentioned, I don't think people were shocked, with his different analogies about what might happen. I think that still what happens between now and October, it's kind of like modular planning. I don't think anyone's, the 5 years out could be 50 years out. What do we do over the next 6 months, 12 months, 3 months? I think companies are probably still bleeding in terms of employment. It's harder and harder to hang on to everyone because even though we're level 3 out of 5 and some things are opening up, the clients aren't there. And South Africa has a strong base of exports and some of those clients are not as open as we are. So, I felt like it was, a prudent kind of presentation that he made for people to be, as Martin talks about, frugal. I don't think anybody was going to go on a spending spree in any event, because I think they've already seen the tea leaves that the environment is tough. If you're an exporter, though, the currency changes. If your base, your costs are the same, makes you more competitive. If you're an importer, and many companies in the country rely upon imports from outside, it's also difficult. So I think it's a bit rough sledding, not panic necessarily, but definitely watching and seeing. And I think with the currency issue, so much of the economy is linked outside of the country as well. So it'll be interesting to see who has a uniquely domestic strategy. I think many are gauging what is happening in key markets that they're linked to as well in this period.
Thanks, Michael. I'm going to hear from Hugo about whether we're missing anything on the economics. Hugo, are we reading these economic numbers correctly? Are we missing anything? Michael also introduced unemployment now surging beyond 40%. Give us your view.
Look, I think the Treasury put a realistic macro picture on the table. Of course, to a large extent, the fiscal numbers depend on what their macro view is. So they're seeing a steep decline or a steep recession this year. Sure, there are some forecasters that are even more negative than that, but a -7% GDP contraction is more or less in line with the current private sector consensus. But then importantly, they see a quite protracted recovery. So it's pretty weak growth recovery next year and even into 2022. But of course, that is understandable given the amount that they think they're going to have to cut back in terms of expenditure. So no, I don't necessarily think the Treasury is missing much on the macro side at this. As I say, personally, I fear that we're going to end up being worse than -7, that it can go to 9 perhaps. But I mean, the point is, I think they are more or less in the ballpark. But just briefly to come back to your question on business and whether business got what they thought. I mean, for me, this is once again a bit of a kicking the fiscal can down the road budget on Wednesday. So we've seen this over the last couple of years, that you get to a big budget event and the Treasury says, look, this is what we need to do. We'll give you the details of how we're going to do it in 6 months' time. Now, again, this is what we had to a large extent on Wednesday. Now, this time around, you can perhaps understand it a bit more given the unprecedented events of the last couple of months. But of course, it's not like we don't know what needs to be done on the reform side, right? Government just has to get down and do it. So now, again, we wait till October. So I think, you know, if I was a business person, I would be a bit disappointed from that point of view, that it's this perennial, we wait to have more clarity on what government is actually going to do.
Martin Davies, when you work with large businesses, senior people in large businesses, do you think this was the business expectation? And what do you think it means for big business now?
Yeah, thanks, Mona. It's not a surprise. It's just compounds the frustration. As Hugo said, I'm tired of the can being kicked down the road. This is a constant in South Africa. And I don't understand why decision makers in the political realm cannot embrace reality and fix things before they get to the point of absolute crisis.
Salman, the Global Talent Competitiveness Index rates the relationship between business and government out of 119 countries at 101. You're not in national government, you're in an agency of government. I can't expect you to defend government, but give us a perspective from where you sit.
I mean, look, I think just taking a longer term view of the South African economy, you know, apart from the competitiveness index, you look at the ease of doing business, for example, which is a World Bank indicator. We've gone in the period of 10 years from 32nd to 82nd in the world, where competitive destinations like Mauritius have in a year jumped 10 places from 20 to 10. So you almost can't strip you can't look at COVID or the repercussions of COVID in an isolated occurrence. I think there's been a buildup of a lack of investor confidence. I think that COVID has catalyzed this, but I think agencies and government at a provincial level are of course sensitive to these issues. So look, I appreciate the fact that, you know, debt to GDP has soared. The optimist in me hopes it's a short-term mechanism to kind of just keep the momentum in the economy going. What I can say is on the provincial level, we have repurposed budgets, certainly from an economic development perspective, because we understand you have to be customer-centric. You have to put private sector at the heart of your operations and of your service in order to grow the economy.
Anna-Marie Leroux, let's move to big business and a potential response now. In good times, business schools tell students that they should focus on innovation, leadership, look deep inside themselves, treat the customer as the heart of the business. But is that where we are now?
Interesting. Yeah. You know, Morné, sometimes it is the crisis or the kick in the side that we need to actually get to be forced to go there. Because unfortunately, when we have the time and the luxury to be innovative and creative and to get a sense of urgency, that is the time when we least want to do it. So therefore, again, the budget speech was probably a little bit of that reality check that we needed. I think to Martin's point, there's many choices at the moment that we need to make. I think for me, the big issue in business at the moment is that there are controllables and there are many things out of our control. A big part of that, obviously, how the virus is how we are going to be able to flatten the curve. So I don't want us to make the problem the problem. We cannot control the virus. So focus on the response to it. And for me, that means our customers' lives have indelibly changed. There is no going back to any sense of normality. So we need to, in response to that, figure out where this customer is moving, and be the ones who will survive are the ones that get curious and intuitive about that and come from a zero base, to echo Tito's words. Literally not to assume that what happened in the past is going to recur in the future. So for me, the whole sense of urgency, that sense of curiosity, that sense of really getting ahead of the curve is going to be critical now. And you can see it in the behavior of leaders, that many of them are zooming in and trying to almost be the busy fools going into action, when I think it is a very opportune time to literally do exactly what we are doing as this panel, to think about what is the issue here, what is the problem that we have control over.
Michael, when you work in your business accelerator, is it about more of the same, or isn't it time for something else then? Anna-Marie says, at the very time when what we need is innovation, and certainly our research shows the same, at that very time, the mind actually does the exact opposite. In crisis time, it's all about locking down the mind very much as you're locking down the society. So when you're thinking of business acceleration, is it accelerating what's currently there, or is it about reinvention?
I think it really depends on where the enterprise was pre-COVID. I mean, if you had a digital strategy before, you're really fine-tuning it and watching it work. If you didn't, and that the acceleration that we're talking about is in the agricultural space. So not everybody has a digital platform, but everybody is much more interested. So you pivot much faster. We work with a company that's in Kenya that exported. The borders closed. They were doing very well overseas. So now they're pivoting to say, how can we supply the local market? I think that, you know, to the point that's been mentioned, companies that were doing so-so are on life support. Some are out of business. It really is become a survival thought process. And again, we're working with much smaller enterprises than let's say corporate South Africa for the accelerator. But those that, you know, and there are some who've said, my earnings have gone up because I actually offer a solution that doesn't require, it's kind of social distancing is built into my model. Yeah. And so now people who were kind of skeptical about working with me are tripping over their feet to work with me. Young lady, I'll just give you this example. In agriculture, she basically, for people who are in urban areas, she collects their money and invests in agriculture. So she's in an economy that has been hit by COVID very hard in their traditional sector, which is oil and gas. She can't spend the money fast enough. The people are now saying, hey, I would like to invest in what you're doing, because agriculture is one of those sectors that, good or bad, you think you're going to need food. So, I think that it really does make you think about what your model is, and then you have to struggle to be creative. Otherwise, you have to close the doors.
Let's develop that a little bit. I want to hear from our panelists, actually. They don't have to give us company names, but just on their exposure to this kind of approach to innovation. Let me give you some examples. Just after the dot-com crash, a little company is created called Netflix. 2 years after that, a company called Google is built. On the eve of the global financial crisis, either listed or started the following companies. In June 2007, the first iPhone is released, just before the global financial crisis. We know about Lehman Brothers filing for Chapter 11 bankruptcy on September 15, 2008. But then May 2009, WhatsApp has its first release. In early 2009, also Bitcoin. In 2010, Tesla. 2011, LinkedIn. Blockchain. In 2012, we had Facebook listing. We had Twitter the year after that. So within sort of 4 or 5 years after the global financial crisis, we had household company names either listing or being born. Are you noticing hard drives towards innovation? Are you seeing any evidence that companies are branching out, exploring, experimenting? And if they don't, can they survive? Martin, what are you noticing?
Look, Moni, if I may. So, a slight observation. Every company you mention is American. And America always has these V-shaped crises. It's wrap it down, it's wrap it up. Why does the US not have, arguably now, but relatively speaking vis-a-vis China, the US does not have structural decline in previous half-century crises. It has V-shaped recoveries because it's ultimately an inherently, some would say brutally, too brutal capitalist system. One of the but what is very resilient in the US is this culture of entrepreneurship. And this is what I think in economies that South Africa lack. And we used to have it, we've lost it. It's this intangible driver of growth and corporate creation. It's called entrepreneurship, this can-do attitude. Someone was talking about the unacceptable, unaccountable, the word I will add, slippage of ease of doing business over a number of years in South Africa. That's unacceptable. We ain't going to be creating any of those companies you allude to or mimic those successes if our ease of doing business continues to decline as it does. We here in South Africa, we had this ideologically laced phrase called developmental state. Now we're calling ourselves entrepreneurial state and all of this type of stuff. It's not about that. It's not about labels. It's about creating a can-do culture within the deeper economy before we even start to think about the incredible corporate successes based on innovation, Morne, that you mentioned. So it's very timely, I think, in South Africa, but I'm not confident politically that we start having a conversation about things that really count in this country. One is most particularly is this culture, using a big word, this culture of entrepreneurship and business success. Let's recognize and reward people who commit capital, who create value. We're not rent seekers or aligned to political factions, but to create real innovation and real value in our society. That's what we really want in South Africa. That's what we need.
Martin, maybe
yes,
I can jump in there. Yeah, maybe my examples are a little bit more low-key and not big business, but I don't necessarily agree with Martin in all ways because
that's fine. I encourage that. We have to. Agreement is called socialism. It ain't good. Let's disagree and we move forward.
Groupthink. My examples are very small and very tangible and very real. So my local favorite restaurant here, 2 blocks from my apartment, is called Grub and Vine. And, the deep emotional distress I felt during lockdown, I cannot describe to you in words, because this is like my 3-day-a-week kind of situation in terms
your
of feeding
spiritual home.
myself. This is my spiritual home. They have not lost one single employee in the last 3 months, because within 3 days of lockdown, we had virtual wine tastings, virtual dinings, buying vouchers to romantic dinners that were only imagined, that has not transpired yet. So to me, on such a small level, and I mean, there are 3 obviously Michelin star chefs associated with this restaurant, but they have a staff of only 34 people, but not to lose a single one, and I'm including the waiters. To me, in this, debacle is a very real, tangible example. I also did a bit of work with my local printers, who is the MD of the printing company. His motto at the moment is, if you can't get out, go in deeper. So he started printing takeaway holders for all the locals in the environment who did not deliver takeaways before. And all of a sudden, he's kind of like seeing a peaked growth that he hasn't experienced since pre-2008. So to me, those little baby, those are the ones, those are the little bricks that to me will build the economy, because Sea Point is thriving in spite of what is going on at the moment in the country. It might be a false state of, pause, I don't know. But to me, I'm seeing a sense of leadership in very small ways, which I think is very positive.
Simon, you're nodding.
But I mean, look, research globally and in South Africa shows that disruption happens. A lot of disruption takes place when there is an economic downturn. The question that I've gotten, it's a rhetoric question, is unlike most economic downturns, which I mean, I'm not an economist, but are predominantly demand-driven, this started off as a supply-driven or a disruption in value chains, and will go on to progress into a demand-driven crisis. What I'm seeing in industry is certainly very, very aligned to what Dr. Davies is saying. Is the innovation that we're seeing is a multinational corporation pivoting from producing X to Y. So let's use Distal, for example, local company going from alcohol-based products in level 5 towards pivoting to hand sanitizers. So the question there is the innovation actually driving economy, or is it survival? And I mean, just looking at medium to large size companies, it is survival, and it's understandable survival. We're living in abnormal times. You don't have any economic indicators really that can determine certainty going forward. So you have to pivot. You have to be a curtain manufacturer that all of a sudden does cloth masks. Is it the high growth kind of $1 billion or $1 billion valuation startup? I don't think so at the moment. Is it about survival and ensuring that we don't go to a 40% unemployment rate? I think so.
I want to hear from Hugo here. I mean, Hugo, you author these macro reports, really big, broad brushstrokes in the medium-term outlook. When you present this information to large organizations, what's the response from South African companies? Are they sort of saying, oh dear, that's the tide, we're just going to survive? Or do they say, well, that's the lay of the land, that explains nothing about our own business?
Well, of course, you have mixed opinions on how important the macro is, but certainly, Mono, from our clients, that's the starting point. Of course, what happens in your specific sector will not necessarily always correspond one-to-one with the macro economy, but at the end of the day, if the broader economy is doing particularly well, to a large extent, that lifts all boats, right? And obviously, we are now in the converse. So no, I mean, I think they certainly do take account of that. Now, unfortunately, of course, it sort of ties into a comment made earlier. The last couple of years, when environments are tough, of course, for an individual business, your first response is cost cutting, right? Now, that is a rational decision from one particular company. But if everybody does it, of course, then it just exacerbates your downturn.
Yeah.
And I think that's exactly what we've seen in South Africa the last 5 years. So companies have, they've trimmed down their workforces. In real terms, in the private sector, we haven't seen wage increases, so that has been flat. Point Martin made earlier. So the private sector has seen significant pain for a number of years, and you've also had these waves of cost cutting, right? Why? Because the economy doesn't pick up, right? So you have some cost cutting. You think hopefully in 12 months' time things will look better, but it simply doesn't. So this is even before COVID, South Africa was in a unique situation where we've had multiple years of very sluggish performance. And I think, I think companies get to a point where, you literally can't cut anymore. You have cut down to the bones. And what do you do then? I think then it comes back to your innovative story. I mean, then you have to start to think a bit differently. Perhaps just another off-the-cuff comment. I mean, this whole forum, the fact that we are using Zoom and that we can have these conversations, the fact that companies do not, and I think this is a major, I almost want to say, discovery for a lot of people, right? You don't have to climb onto an airplane to attend a meeting in Joburg. So can you imagine the cost saving? Now, of course, the airlines will suffer. The hospitality sector will suffer, but in general, this will actually benefit, I think, a lot of companies. This sort of something that has been there for a while, but now we're only really discovering the benefit of these type of technologies.
But can we, in fact, cost save our way out of this if we were already in trouble as we went in? In fact, Michael was challenging us at the beginning. He's saying, pivot, look in a different place. You're going to save yourself into poverty here. Do something else. Michael, having heard all of this, you still hold that view?
No, absolutely. The companies, to me, that have been holding fort are many of the companies that have a footprint across Africa. We track that, and I'm sure Barton does too. That number is growing. And the income from these other markets that haven't been hit in the last decade, like South Africa, is what allows people to pay the bills. Because this market has been flat and declining. And in the next 2 or 3 years, I don't know that that's going to change. But, macro numbers, the continent in the next 30 years is going to double. So you're going to have 2 billion people on this continent. That's, another billion. So 300 million per decade. Most of those people are not going to be in South Africa, but they're going to be elsewhere on the continent. So as I started my comments, it really is time to stop thinking just nationally and think over the border. You've got a continental free trade agreement that is meant to facilitate this even further. You've got challenges in some of our main markets, which help you look local, and local being the continent, rather than think, I'm going to US, I'm going to Europe, I'm going to Asia. And those companies that have supply chains that are outside, they're still making money, because outside of South Africa and Egypt, most of the continent has not been hit from the health standpoint. And so their economies are kind of percolating along. In many places, the social distancing that we've experienced doesn't exist. And these are some good sized economies. So anyway, I mean, to your point, absolutely. To me, if one just focuses on the South African market, I don't know that the solutions are going to be there. I think it's going to be belt tightening. But just across the border, across the Limpopo, lies a region, again, it's going to contract the rest of the continent, but nowhere near, I think, where we are. So that's just something, food for thought.
Yes. Martin, you have this Pan-African perspective in your work. And then after Martin, I want to hear from our other 3 guests on what would you do? So I'm at a crisis mindset. Everyone's telling me how times are tough. But I'm nervous about saving myself into my own demise. is it possible now to think in an innovative way from the depths of this despair? Martin, what's your view? Is it viable now to look across the border?
Well, thanks. Yeah, of course. I mean, what Hugo said earlier is that, it's entirely rational as an individual actor to cut your costs and sort of, clean up a balance sheet and try and be resilient and move ahead. If an individual does it, it's rational. If a group does it, it's irrational. And that's the ultimate paradox we have to contend with here. I totally agree with Michael about the Africa story, of course. But one needs to very selectively choose one's battles or targets in a very, very fragmented, homogeneous, heterogeneous continent. But one thing I think for us, what we're not seeing, where the opportunity lies, Mona, you mentioned, is firstly, our currency devaluation, which has seemed to be almost a given. A lot of companies in the last decade or so have internationalized earnings. Earnings in hard currency, rand is weaker, they actually make significantly more cash in terms of the arbitrage of the currency effectively. But I think look at what was said earlier. We all accepted that this COVID thing has been an accelerant in many respects. It reveals fragility, it increases the adoption of tech. It's just accelerated so many aspects of our work lives, maybe even personal lives. It was mentioned earlier, we're all having this conversation. We don't have to meet in person, and that's far more convenient and cost effective, Hugo, as you were saying. Our travel budget this year will be minimal, and for Deloitte, that's an incredible saving. That's great. But I think look at it this way from a South Africa country perspective. This is maybe what Salman will pick up on. Is you have devalued currency, you have increased adoption of digital, you have an economy which is increasingly service inclined, i.e. not industrial or resources. You have an inherently capable English language speaking population, and we're on a favorable time zone to Europe. Amazon just put up a data center in Cape Town. Salman, well done. Kudos to you. Employing 3,000 odd South Africans currently virtually. That's fantastic news. There's an incredible enabling opportunity here, whether you're an individual or whether you're a company, I can't think of, this is a bold statement, don't hold me to it, I may be totally wrong, but I can't think of another country globally right now, English-speaking country, that is able to export services as well as we are for the price that we can achieve or price those services at. We are potentially incredibly competitive. And all of a sudden, it's not long about exports of goods and products, and that's so 2019. It's about the exports of services, tech-enabled, English language underpinned, and currency supported, if that makes sense.
Hugo, we're reinventing the South African economy here. The composition, the structure changes dramatically, or are we quite fleet-footedly positioned to move into much more of that kind of competitive national economy?
I think there is a part of the economy that is, but of course the difficulty in South Africa is the differences in skills, right? Let's not say ability, let's rather say acquired skills. I think the ability is there. It's just that as we know, a whole bunch of reasons, there are backlogs, etc. So the difficulty is always how do you make what Martin is saying, how do you make that inclusive? So I mean, I'm not disagreeing at all. I mean, those are fantastic opportunities. But how will you get that to filter through to the poorer masses? Now, I don't have the answer for that, but perhaps I would just say that yes, of course, focus on those opportunities and exploit them to the full. But you also have to think of what are you going to do, or how are you going to employ people that perhaps cannot immediately participate in that. So I think we have to try and do both in a country like South Africa.
Are you able to communicate this competitive advantage that Martin is sharing to the international world, and are they listening?
Yep. So I think from so are we able to communicate it? Yes. One thing that the Stellenbosch MBA taught us was that in times of difficulty, you need to increase your marketing presence and certainly build brand equity. Wesgrow as an agency is certainly doing that on behalf of all of its underlying departments, be it tourism, trade, investment, film. So that message is being communicated. I mean, I diverge or just I go off script slightly, but you would have seen a few days ago, Turnlane did an analysis on their tourism clients, and basically what they picked up was the most popular post-COVID leisure destination is South Africa. That's ranked number 1, whereas the Alps, for example, are ranked number 38. So are we communicating the message? I think so. Do we have institutional memory from dealing with other crises like the water crisis and load shedding? Absolutely. Is the international community going to listen to us? So I think on the export side, yes. Although we also have to take into consideration that destinations are going to be localizing as well. So our strategy is to look at who's spending their way out of COVID. I mean, we're spending, I think it's 10% to GDP. What are our traditional markets doing? What are our new markets doing? And how can we locate ourselves in that? To end off, I think what Dr. Davies is saying, trade in services is becoming front and center in our world. And it's something that, I can't, of course, mention company names, but we assisted a company a few weeks ago locate to London in that vein. So I think higher value exports will certainly become more of a narrative for us.
Right. Well, what a time of fascinating paradoxes. Localization of the value chain and a call, a necessity almost, for globalization in the exploration of new markets. So here I am, Anne-Marie. I'm in a large listed South African business. I've listened to all these remarkable minds on this panel. I've said, okay, fine. I've been hoarding cash for years and nervous about the South African future. Now we're in crisis. It's a perfect time to spend. What do I do? Where do I start? Even if I think innovation is a good idea.
Oh my goodness, yes. If I had the answer more, I would have been very rich probably. But it makes me think of one of the customers I had a session with last week who said to me, he's actually a CEO of a medium-sized corporate. And he says, what do I do if I don't know what to do? Because there's such a sense of, the busy fool. I want to get into action because we zoom in. I mean, we are in fight or flight mode. And for me, it kind of like reverts all the way back to where you started our conversation this afternoon with Tito Mboweni. To me, a zero-based budget means back to basics. So literally asking yourselves, what are we good at? What are we good at? And maybe in a positive way, then saying, what can we do slightly better to keep it positive? Because there's some inherent capital in a company that I think in many ways get fluffed up and artificially enhanced throughout our tenure and by ways of business modeling. How do we create value? Looking at your strategy and seeing if you can flex it to kind of like incorporate opportunities that are very, very low hanging at the moment. But there's also some very, very real questions that need to be asked in terms of your team. Because what we needed before and where we may be heading at the moment means that previous high performers might not be the relevant team at the moment. So for me, a big one also, a big thing that leaders need to think about at the moment is how do I lead? Because if I'm sitting with a virtual team that is onerous, agile, needs to be measured in different ways, is much more purpose-driven, because there was a huge shift. There's a shift happening in terms of work-life and what does work-life mean at the moment. It takes a very different kind of leader to maintain versus to take us to the next level. So the only thing I can help with and I can suggest at the moment is to really think and to ask very pertinent questions in terms of what you already have. And that thinking is almost part of preparing, rather than just going and doing, processing, system and people innovation is literally to just ask a few questions before we go there.
To come back to a point Anna Marie made on sort of the same thing that, you know, I sat in a CEO forum a couple of weeks ago and sort of talking about how do CEOs react in these conditions. And the one point made that stayed with me was that given the crisis, one is flustered and you sometimes feel like you have to do 100 things, but actually a prudent thing to do is focus on a couple of things and do those things better. Now, I think you can take that a bit further and say, this is actually an opportunity for companies to show their true value to clients, right? So obviously you're under pressure, your clients are under pressure, but if you can come out of this and during this time, you've really proven your worth to, and it's sort of an obvious thing to say, but you've proven your worth to people by, again, doing what you're good at, but doing it even better now, but also communicating with your clients, really hearing from them, you know, what are their specific needs in this time and trying to meet that. It's, again, it sounds very simple, but I think that may actually, you know, be a good thing to pursue in these times.
I want to just touch briefly on two elements, and firstly, let's talk about corporate finance. I've got sovereign debt increasing. I suspect there might be some temporary relief from the banks in terms of cash flow, but of course my revenue's down dramatically. Maybe I had a bit of cash in the bank. I'm going to retrench, and now I'm sort of stuck between, do I hang on? Am I frugal? I cut my costs down to the bone. Do I make a little bit of a funding available for expansion, for innovation? Do I go on the hunt for acquisitions? And I know it's a varied picture, but what do you tell the chief financial officer of a listed company in South Africa at the moment? Any thoughts? Let's see a hand or two. Yes, please, Michael.
I guess my thought was, I mean, two things, and this is now your listed company that has some access to the markets. It's also a good time to look for opportunity. So, you know, your competition is decreased because they're struggling. So if there's a company that you could acquire, it might be worth looking at because they might see it as a merger, if anything, to kind of, okay, the two of us will rationalize, create our space or take our space in the market. Obviously, as Anne-Marie said, you do want to think about what you're good at, but there might be an innovation that you wanted to bring to market. And again, if you're a listed company, you probably are doing better than 85% of the other companies. So you might be able to crack the market in this period. So I would, you know, be strategic, but take some shots, because this is a time when your competition globally is distracted and to some degree weakened. And so there are, in my take on it, opportunities.
Give us another view. Any one of our brave, insightful panelists advise the CFO.
I won't advise the CFO, but I'll caution the response in, you know, just from a few different perspectives. I think the one is what we've seen industry doing when it came to them having some balance sheet. You know, one SME, for example, you know, wanting to be a kind of a responsible corporate citizen, said, look, we don't have a balance sheet. I will pay all of you if you allow me to pay all of you from my bank account and cover your rentals, cover your groceries, etc., etc. We can keep this business alive, and in good times in recovery, we'll make the shortfall up to you. So I mean that kind of concern or societal concern, I think, is critical in a place like South Africa, where inequality is it's the worst in the world. So I think that's kind of more of the social entrepreneurship or the social angle that we have to be seeing in South Africa, because of our dynamics. I also think look, we live in a capitalist society. I think that there are going to be winners and losers. My personal view is that there's going to be massive consolidation. Private equity firms are going to buy up distressed assets at an absolute song, in line with what Michael is saying. And I mean, look, while there's a downside to that, there's an upside. People are going to retain their jobs, and hopefully off the back of those kind of initiatives, there will be long-term economic growth.
I'm going to, in conclusion, give each one of our panel members just a final opportunity to give their reading of what they're observing and any thoughts of what they think might be emerging. And if I can push you, be almost unreasonably demanding, do let us know something about what I do with all these talented people that business schools have been telling me to train and retain over the last several decades. What do I do with them now? If you can work that in there, we'd really appreciate it. I'm going to just jump on you in any order. Michael, come to you, and then we'll move on through the panel. Give us a last word.
Sure, and I know a lot is made of the challenges for entrepreneurial thinking in South Africa. Particularly, seems like it's in decline, but it's needed. Infopreneurs or internal entrepreneurs in a company are critical now. So I think that it would be a great time to encourage. Typically you've got your biz dev team and they come up with all the things and everybody else is just following. But throughout the organization, push them to come up with ideas. This is the time for that one person who did have a good idea, who couldn't get it past their line manager, to now speak up. And it helps the company, it helps them, and they feel yoked to the business. So I would say it's a great time, from the kitchen person to the senior VP. What can we be doing better in this period of time? What are markets that we hadn't thought about that we might serve with our core products?
Martin.
I want to thank you, and thanks for your moderation. There's two things important right now when listening, talking with senior executives. It's people and it's cash. It's liquidity and well-being of one's workforce. We must look after, as much as possible, the people with whom we work, particularly, as Simon said, the fractious nature of society in this country. Beyond that is, a friend of mine said to me about a year or so ago, you cannot entrepreneur your way out of a failed state. Now, what we're losing sight of here is that what are the political repercussions of a pandemic? And I'm thinking, looking forward here to leading up to 2024. It seems a long way away. It'll go fast. I think there's a I don't use this this opportunity word. It's too simplistic, it's too superficial. But unless there are some significant structural reforms, and structural is a euphemism for politically difficult to do. If there's not some significant structural reforms in the coming months in this country, I'm afraid that we're on a political path that will lead us to a very dark place. I think more than ever that it's the responsibility, it's the imperative of business to continue to take this messaging to the political decision makers in this country, who at times seemingly, as priority set, is very different from that of us in the real economy. Thank you.
Thank you. Salman.
Yeah, I think I'm going to sound like I just agree with Dr. Davies, but it is the truth, right?
Tough not to sometimes.
No, but I mean, what I'd written down in response to your question was the fact that government policy is not anywhere near aligned or where it needs to be to support private sector. Speaking about entrepreneurship and know-how earlier, you look at the immigration policy of this country. You're not going to attract the right kind of talent to stimulate the economy. Given the limitations on critical skills, etc., etc. So I think my first point is government has to take this opportunity to align or to better align policy to support government, whether that means liberalizing regulation or just being more customer centric. I think it needs to take that opportunity right now. I also think, generally speaking, I may be a bit of an optimist. So I don't buy the narrative of unprecedented times, and I think that the human being has shown through time and through history that it has been able to bounce back. And I think that if we put our minds together as South Africa, we'll be able to do so as well. And then I'm going to go back to my previous or my very first point, is that this is an opportunity for companies to localize, to strengthen or firm up in the local economy, and Wesgrow and certainly Invest SA are there to support you in doing so.
Echo, give us that macro view.
Look, I almost want to say that the most innovative thing that whether it is government or business can do is to move away from this sort of fixation of wanting to control things from the top. So to rather move to a sort of a bottom-up approach, decentralized decision-making. Government don't sit there and want to play puppet master string. Listen to, decentralize it, listen to the private sector's needs, but actually allow the private sector to take these decisions on their own. In a company, you can say, the point has been made, your line managers, the people that are on the ground, this is a fast changing environment. At the top, you can't be aware of all these things. So decentralize, get feedback from a bottom-up approach, and I think that, for me, that would just be a more sensible way to go about it.
The final word is to you, Anna-Marie.
Thank you, Morna. Thank you, everybody, for having me. Hugo, I want to maybe take what you just said onto almost an in-house level and say that, it's time that our leaders show their return on investment in terms of dollars spent on education. It's time to lead. For me, it's about creating a reimagined, purposeful ideal, and then get out of the way so that your teams can create value. And they need to create value through the application of newness. For me, it's this example of telling your team, listen, we're not flying, we're not spending money on this, we're not doing it. Rather say to your team, listen, I need 1,000 Rand from everybody by the end of the week. You will be amazed. So for me, let's create value. Let's get that common purpose sorted. And I think there's many, many people's hands up that can lead the way.
You will be amazed. You've heard it here from my wise and talented panel, who have been Anna-Marie Leroux, Hugo Pienaar, Salman Kaji, Dr. Martin Davies, and Michael Sudakaza. This has been brought to you by the USB Ed, the University of Stellenbosch Business School Executive Development, in partnership with the Institute for Futures Research, where we say every risk and every opportunity lie in the future. I look to the future, said the Hollywood comedian George Burns, because that's where I'm going to spend rather a large part of the rest of my life. My thanks to all of you for watching, and to our expert panel. Good luck. Goodbye.